I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good afternoon, everyone. This is your Editor-in-Chief, John Darsie, here to bring you the daily recap. So today we got a nice drift melt up higher back to near all-time highs in the S&P. Does that sound familiar? I mean, it's been pretty much what we've seen for most of 2013. The action was quiet today, but it continued to remain bullish, and you know, we're back up here with the S&P right underneath all-time highs or pivot highs here, and this remains a resilient market. You know, we've over the last couple of weeks we've pointed out, you know, some faulty signals and some signs that perhaps a correction is imminent, and each time we point out those signs, the market just shrugs off any bad news that we did see or any weak price action that we saw, and you get sector rotation to pick up the slack for some weak sectors, and the market just keeps on climbing. If you go to the chart of the S&P, you can take a look at it today. We just had basically a drift higher in a quiet session. As I think the Jewish holidays, the fact that it's spring break, the fact that we're coming into the end of the quarter, these are all, and Easter's coming up this weekend. I think those are all factors that are combining to make this a somewhat quiet tape. And what they say, you never short a dull market, and that is proving itself today and this week. And I think that's going to be continue to be the theme, as we don't really have any big news releases or headlines. We got that Cyprus news out of the way for the most part. As we sort out the bail-in, bail-out headlines, where you sort of have a new precedent that was set in the way the bailout was constructed for Cyprus, and that they exhausted basically every creditor that Cyprus has, all the way down to people holding deposits in their banks. And the banks remain closed, and they're taxing deposits, which is a little bit of a controversial step. But it'll be interesting to see if the ECB continues to take that type of hard line in the future. We face bailouts for other bigger nations, not just a minnow like Cyprus that wouldn't have as big of a domino effect if the ECB did let it fail. But that's enough talk about macroeconomic factors. We'll get into some stocks. Apple is one that we've been watching, and it wasn't really noteworthy today. But the level Scott's been talking about that's very important for Apple to hold above and give some consolidation above is this 460 level, which it broke above the 50-day there. It's broken this long-term downtrend, so that's constructive to see. Apple break that downtrend and then sort of rest and consolidate above it. It did show a little bit of relative weakness today, but I think with a little bit more rest, you could see Apple back on the move. And I think the psychology of this trade and the sentiment on this trade has shifted a little bit to the point where we could get some more bullish action and perhaps a climb back up into this pivot, and then maybe eventually this gap up here around the 510 area I think would be a natural place for you to see Apple go. We saw, like I said, it's sector rotation that's really saving this market and allowing the market to continue to climb despite pockets of weakness and faulty signals that we're seeing. And today we saw some rotation back into some leaders that have been basing at upper levels. You had Netflix sort of hanging on to its 21-day moving average by a string, or it closed a little bit below it yesterday. You see those 8 and 21-day moving averages are very close to each other. And today you had some positive comments from Pacific Crest, basically upgrading Netflix, and I can't remember the price target on it, but they were very bullish on the stock, and it triggered a nice move. As you can see here in Netflix today, it was up, I can't remember the percentage, but you have a nice healthy gain, almost a 10-point gainer. It's very healthy to see stocks base at upper levels and then extend back to near highs. That's a sign of a healthy market when you have money continuing to pour into leading stocks that, are holding up at upper levels after about 100% move since earnings. I mean, that's a huge move for Netflix, but there's still demand for the stock at this price, which is constructive to see for the market. Boeing was one that Scott talked about in his 2013 predictions that continues to act very well. If you use your 8-day moving average as a short-term gauge of composure for a stock, you saw Boeing continue to hold above its 8-day after that strong move out of the base that Scott highlighted in that 2013 predictions post. It's already reached his targets for the year with a very healthy percentage gain. So maybe you pare back your expectations from this point on, but based on the price action, it looks like Boeing wants to go a lot higher. And you see that pivot that it closed just above today, and could set the stage for some more bullish price action. LVS was another one. You saw some money rotate into the casinos. LVS with a nice breakout here above its pivot. It's sort of in this ascending channel, which sometimes we watch for a potential break to the downside, but if that does trigger. But in this case, we actually got an acceleration out of that ascending channel, which is extremely bullish to see a stock trend higher and then accelerate that trend above a pivot. But at this point, after the move it's seen over the last month, I would say it's a little bit hard to be buying LVS up here. And so what Scott has been doing is looking to play a little bit of a laggard in the sector is MGM, which hasn't really run, had this big spike here, and it's sort of consolidated, a nice little handle type pattern if you want to talk about a mini cup and handle here. So you could see MGM make a similar type move as LVS. It has some room. It's got a longer term downtrend that it's just starting to break above and consolidate near the upper end of that channel or wedge, I guess you would say. But MGM is the one Scott's playing that could potentially have more upside. Then we'll talk about the credit cards. Credit cards are very impressive today. Visa in particular, this is one that we've highlighted on Off the Charts. I've talked about it on several morning calls and daily recaps that I've done as one that it's a little bit off the radar because it's been basing and it's really underperformed the market during 2013. But it's basically continue to consolidate at upper levels, which is very healthy action after a monster run over the last couple years. Look at that move for Visa. Started 2011 in the $70 area, more than doubled from there. For a credit card stock, I mean that's a tremendous move for everyone on every different time frame. But if we zoom back in, great breakout out of the wedge pattern here. You can see this was drawn, way back when. So we've obviously been drawing this and talking about this pattern for a while now. Great move in Visa. You look at MasterCard. Today it woke up. Yesterday Visa woke up and is acting a little bit stronger than MasterCard right now, but you see MasterCard just starting to break out of this upper level base. Very impressive action in the credit card names. We're going to take a look at the banks here, not because there's any compelling setup necessarily, but this is a sector that I think you really need to be watching closely right now for the market. Not just to be trading the banks, but also as a sort of a barometer or a bellwether for the broader markets. And the banks have been weak over the last few sessions and over the last few weeks actually. Goldman Sachs in particular, since it had its capital plan rejected by the Fed. But you've seen the market sort of absorb and shrug off weakness in the financials lately, which is healthy. I talked about sector rotation. You see, the financials pick up the slack at times, and then we see money rotating back into some leading tech stocks like a Netflix. So I think it's important to note this, but I would watch the financials closely over the next couple weeks to see if we do get more selling pressure, because I think that could put some pressure on the broader markets. But you could also look at it the other way, that if the financials do start to wake up and you see a stock like Goldman Sachs start to push higher, I think it adds some fuel to the market that hasn't been there over the last few sessions. The market has been able to rally without Goldman and without the banks, and if they do start to join the party, it could be that extra little push that they need to really get some momentum above highs in the S&P. Let's look at a couple other patterns that are setting up right now. We have Mercadolibre, which is basically like the Latin American eBay, that has what looks to me to be a nice tight consolidation upper level pattern here. You zoom out, you can look at the chart there. It's coming. It has a little bit of room up back to 52-week highs, and I think that's a natural target, based on this pattern, this little flag pattern. If we zoom back in, but if we get our line tool out here, we can draw this nice little upper level base. I know some guys, I called it out in the virtual trading floor today, and some guys were talking about it. I think it's one you can definitely keep on the radar for a potential upper level breakout. Another one that looked like it was starting to go today was Open Table. I got to get off my line tool here. Open Table had a similar type upper level base as Mercadolibre, and it looked like it was getting ready to go today. We zoom out, we see where Open Table came from. It was a $120 stock, and it's right now it's half of that, but so that tells you it has a little bit of room to go if it does break out here. But you had a nice upper level base and Open Table. Looked like it was getting ready to go today. You look at the take a look at the 13-minute chart. We have our Fibonacci charts here. We'll get it on the East Coast so we don't see the after hours action. Great early action in Open Table. Let's get our volume on here. I think this is something we need to have. You saw great volume, great price action early in Open Table, but then it crapped out a little bit. That's not the type of action you want to see, but it was a very low volume pullback on Open Table. So I don't think necessarily this is a topping tail or anything like that. I just think Open Table might need a little bit more time before really getting momentum and sustaining a breakout above that upper level. Another one that's interesting that I hadn't seen before, a trader pointed out to me today, is Ambarella. It's a company that makes software and chips for capturing HD video that doesn't take a lot of memory and stuff like that, and it could potentially revolutionize smartphones and things like that. I think enabling people to capture high resolution movies and videos and stuff like that. But we go back to the daily chart. This has had two very strong days. It's a relatively new issue. It IPO'd back in, looks like October of 2012. And we like to see a stock that IPOs and pushes higher initially from that IPO. It's really telling about the future of the stock, the future of the company. And it has seen a big move since the IPO. So, psychologically it might be a little bit harder to buy up here, but two really bullish days of price action. And if you're a momentum trader looking for stocks that are moving and that have volatility, I think this is one that you should definitely have on your radar, AMBA. The last couple times I've done daily recap and morning call videos, I've gone over a couple more value dividend yield type plays, and one that's on my radar right now is a Procter & Gamble that, Procter & Gamble doesn't move a ton. It's not a very volatile stock. Like I said, it's one of those slow mover, high dividend stocks, but you see it after a nice run up here to start 2013 at the end of 2012. You've seen it put a nice upper level base in, and we're not looking for that explosive momentum move above highs in Procter & Gamble, but technicals apply to every stock, and I think this upper level base is something that you can look as a gauge and as a potential. If you're looking to enter a stock like this, you can potentially look for a breakout above this pivot that's just below 78, about 77.82 as the high of that candle that marks the upper end of that range. Something to keep an eye on if that's your cup of tea. And we're going to go over one short setup. I know it's sort of hearsay to talk about short setups in this market, as we are very resilient. We shrug off any sort of weakness, but when we do get headlines of near all-time highs in indices and exuberance like that, it's not bad to have a couple short setups in your back pocket if you do need them. If we do get some surprise headlines or some surprise weakness. And Expedia is a stock that I think is sort of teetering on the upper or on near upper level support. It's broken below its 50-day, its 21-day, and its 8-day moving average. You can see those curling down, and you've seen what we like to see is a stock that's rolling over on a larger time frame. I wouldn't say this is exactly rolling over, but put in a little bit of a lower high here, and then you like to see multiple days of constricting price action and a tight range that they can base your entries and your stop loss on, and that's what you have in Expedia. Today it's sort of crept below this little ascending channel, and I think tomorrow you could potentially see some follow through to the downside if this pattern is valid and the trigger is actually a valid trigger to this pattern. And you can put your stops potentially up at the top end of this range if you want to have a pure technical approach to this setup. But this is one that looks like it's weakening a little bit at upper levels. That'll about do it for today's daily recap. Like I said, it was a quiet session today with spring break, with Passover, with Easter coming up. with the end of the quarter coming up after a very strong quarter, it's definitely very possible that we could get quiet action the rest of the week. I know Scott's going to be out Wednesday and Thursday in Vegas on a sort of a secret mission. You guys will learn more about that next week, but something to keep an eye out for. And I think it'll be quiet in the market and around the community a little bit this week. So if you had a good quarter, pat yourself on the back and don't go out there and risk some of the money that you potentially made. And if you are a little bit behind this quarter and you didn't necessarily perform up to your expectations, I think now's a good time to evaluate your performance and evaluate maybe why you didn't follow your rules or why you didn't follow some of the trends that were out there, and listen to some of the signals that were telling you this market was looking to go higher. But there's 3 more quarters left in this year. I know we had a strong start with the first quarter, but there's going to be plenty more opportunity. There always is in the market. That's one thing you can always guarantee. But this is John Darsie here for the Daily Recap. We'll see you out there tomorrow.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.